politics, let's move on to the Times, Ashok. And this is John McDonnell, who's going to be speaking later on today about his programme for nationalisation.
Yeah, so John McDonnell's talking about public ownership, but not just public ownership, actually trying to democratise the workplaces. And I think, look, I think this is a very positive thing. And I'll tell you why it's a positive thing. From a purely economic perspective, but also in terms of how people feel at the workplace. Democratizing workplaces is actually a really positive thing. There's a lot of sort of alienation at the workplace. People feel like they don't have any power. They're being told what to do all the time. They have no agency, even though they're crucial to the functioning of any service, but particularly public services. But in particular, I would say that if you look at transport, for example, you know, there's a poll that was done last year. More than 80% of the public want to renationalize rail. And right now, what you have is extortionate prices, falling wages in transport, and vast amounts of money being funneled out towards billionaire playboys to, you know, have a field day. And that's a form of legalized corruption. This is public money that's going into private profits. Instead of that, you say, we're going to bring it in, we're going to increase wages, which increases the amount of money that's spent in the economy and spurs the economy. We're going to decrease fares, which again increases money in the pocket and spurs the economy. And we're going to have more money in the public purse because it's not going to some private billionaire playboy.
A lot of people would say, particularly with the rails, though, that privatisation improved services no end. I mean, the World Bank did a study that pre-privatisation in 1989, the level of investment was so low compared to what then followed. Some people must be a little bit concerned that investment in the railways might, in the short term under nationalisation, good pump of money in, but long term, where's the incentive?
Well, I mean, firstly, I would question the World Bank's neutrality on this. They've been consistent in pushing the privatization agenda. Secondly, I think if you look at other metrics, the cost of buying a ticket has gone exponentially higher. The amount of money that rail workers are making on average in real terms year on year under public versus private has fallen exponentially. So for me, it's like those things are also important. Yes, services, delivery of services, and I think that they're not irreconcilable. I don't think it's implicit of it being a public service. But look at the NHS. Do you think that private NHS would deliver services better?
Anyway, even no matter the cost of buying these companies off private ownership, the cost of buying a gas company or an electric company.
Your head. No, there is a cost.
No, they're not.
They've got shareholders.
They're not buying the company. So with rail, you just wouldn't renew.
But with water, with rail, they said they'll wait for the contracts to run out. With water, energy, Royal Mail, they're going to have to buy.
They're going to have to buy them. They can't afford to buy them.
And that's a question. It's good we're bringing this up because it's a question we want John McDonnell to answer in about an hour's time.
We shall be putting that very question to the Shadow Chancellor a bit later on.
Yeah, good. Ask him.
We will. Petrie and Ashok, for the moment, thank you very much. We are going to take a break. Much more coming up after that. And the Shadow Chancellor joins us ahead of his speech at Labour's Alternative Models of Ownership conference to tell us more. Good morning to you. What are the alternative models? This is just nationalisation, isn't it?
No, we've made it very, very clear we don't want to return to that sort of centralised bureaucratic nationalisation of the past. In fact, people like me never really supported that sort of model. What we're looking at is much more about how we manage our public services in a devolved way, where you bring together, well, representation from passengers or consumers, the workers themselves, and expert management with democratic involvement, particularly through local authorities. And in that way, you manage the service not for profit, but for the basic of delivering the service on the basis of local people's needs. In that way, you don't have this draining of resources in the way you have, for example, in the water industry, where £18 billion worth of dividends have been paid out to shareholders over the last 10 years, whilst bills have gone up and actually the service has declined.
But that model of public ownership, we think back to the 70s when the prefix British in front of things like British Rail really was a byword for substandard late trains. You know, don't tell me you don't remember the stale sandwiches. It hasn't got a good track record. You do remember the sandwiches.
A lot of that is myths as well, I have to say, because I do. I'm old enough to. But if you look back on some of the more objective assessments, even of British Rail, actually in comparison with the investment that went into British Rail, in comparison with the rest of Europe, it was pretty efficient. But I don't want to go back to that sort of management. What we want to do is devolve it. And as I say, in some of these instances, not on a not-for-profit basis, it's happening already. In Wales, water is supplied on a not-for-profit basis. Across Europe now, there's literally about 800 examples where local municipalities are bringing public services back into public ownership, but manage them in a way which is much more cooperative. I want to move from the dominance of the shareholder into a more stakeholder model. In that way, I think we'll become more efficient, certainly more democratic in terms of the control of this, but also I think we can deliver the service more effectively at lower cost.
But why is it such a bad idea for the private sector to take on some of the liabilities? That way, that completely reduces government debt.
Yeah, but you know, that was one of the arguments that was put to us, that if you privatise these services, you'd also shift the risk from the public sector, from taxpayers, to these private companies. But we've had the same problem as we had with the banks. It's a thing called moral hazard, you'll remember, where basically the risk, when these companies fail, the risk comes back to us. We saw it with Carillion. We're seeing it now on Virgin on East Coast Line, which the franchise failed. It was brought back into public ownership. It ran for a couple of years very efficiently and paid money to the Treasury, got reprivatised, and now it's failed again, it's having to be brought. So we seem to be bearing the risk while the private companies take the profits.
There has been obviously a lot of public scrutiny, and you're right, over private finance deals. But with your model, what would the cost be?
Right. It would be cost neutral. The way in which we do it, take water, for example, Well, let me just explain. What we would do is we would take control of it. The shareholders would get bonds. We'd borrow for those bonds. That's what bonds are. But the profits that we would make, because these are profitable operations, it would cover the cost of that borrowing. But in addition to that, the profits levels would enable us then also to reduce bills. I give the example of let me use this metaphor if you like. It would be like when you go out, you buy a house. You buy a house, say in London, the average price $500,000 now, unfortunately. You'd get a mortgage, you'd buy that house, you'd then rent it out. The rent would then cover the borrowing costs of that mortgage. And in fact, you'd most probably make a bit of a profit where you'd be able to improve the house as well. That's the sort of model we'd use. This is happening right the way across Europe and other parts of the world because privatisation has failed so badly.
But with that model, you'd have nowhere to live if you rented out your house. Coming back to the bonds, how much would you borrow?
But this is a commercial operation.
How much would you borrow, though?
Well, this is a commercial operation. Well, for each industry, the price would be set by Parliament itself, as has happened in the past in nationalisations. You wouldn't speculate on that cost now, but whatever the cost would be, it would be cost neutral because the sector that you were taking into public ownership would deliver the profits, would enable you to cover the costs. So it would be cost neutral.
But you must have
that's
a
the
ballpark.
Office of National Statistics and it's international.
You must have a ballpark figure because people watching at home will want to know where are the pound signs going, a round ballpark figure of how much it would actually cost.
It would be cost neutral because you would be bringing into public ownership an asset. In addition to that, you'd not just have an asset, that asset would give you income, and instead of that income going to shareholders, it would come to the taxpayer. And you'd then decide, do you reduce prices of that service? Do you invest? Or do you bring it into the Treasury? My view is you do a combination of investment and reduction in prices. In that way, not only is it cost neutral, it will pay for itself to improve the service in the long term.
I think that cost neutral idea is one that's quite difficult for people to get their heads around. I mean, if you are taking into public ownership companies that have been privately run, you are going to have to pay a cost, if nothing but compensation.
Right, let's go through this again. And I'm sorry if I'm not being clear enough, but it's straightforward, this. It is exactly like taking out a mortgage. You take out the mortgage, and if you're taking out a mortgage to purchase something which is giving you a steady and good income, like all of these industries would do, you will cover your borrowing costs, but actually you'll then make a profit that enables you to invest back into that service. It is cost neutral. This is not me saying this. This is the straightforward accountancy rules of the ONS and international accountancy standards. The issue for me, and this is very straightforward for people, what we do now is instead of having £18 billion over the last 10 years in the water industry going to shareholders, that money will come to taxpayers and they will decide, along with consumers and workers and management, whether they reduce bills or whether they invest or whether they do both. My view is they'll invest and they'll reduce bills. And the recent research by Greenwich University said that on water alone, we're paying out every year an extra £2 billion. If we didn't pay that out in shareholding the way that's been going on in recent years, we would be able to reduce the price of water bills by £100.
So just to clarify, public ownership would cost absolutely nothing?
Exactly that. In fact, we believe, because we would manage it more effectively and would cut out this draining of resources by the shareholders, we believe actually we'd be able to reduce consumer prices and invest in the industry and make it more efficient.
Nationalisation will cost us nothing. He said exactly that. You guys were getting in a bit of a tiz about that.
Yes.
Well, I mean, look, the way it's presented is it costs nothing. The way it should have been argued, and I agree with John McDonnell on this, is that in the long term, in the short term, of course it'll cost money. It's like, and the reason why we draw a parallel with mortgages...
So it will cost money. You're an economist.
It's like this. Look, let's just say this. The reason why you draw a parallel to mortgage, it's not a one-to-one, two-dimensional, unidirectional comparison, but no comparison is. In the short term, I'm paying rent. I'm paying rent to some private landlord. That landlord is going around and gallivanting around the world. And instead of that, I go and borrow money to pay for a house. It's projected earnings. So instead of paying $2 billion we're losing from private water, for example, in the short term you borrow and pay, you pay into bonds, etc. But in the long term, we not only it's budget neutral, we're actually bringing in more money. And
however,
that's what the independent
from an economic point of view,
when you borrow that money, yeah, you've got a debt.
Sure, but when we pay,
the debt will increase in this country.
I'm saying there's a short-term and a long-term analysis. Yes, in the next 4 or 5 years, potentially, you'll have a little bit of a debt question, but in 10 years, you'll be in a surplus. So it's a question of how you look at it. You're like, oh my God, debt. Well, every time we printed a pound in this country, we're in debt. So the idea that debt is something that we can avoid entirely is absurd. But
so he can go to these private companies, because I don't get this, but I'm not an economist. He can go to these private companies and say, right, we're compulsory purchasing said water company.
Yes.
Right? And then they go, OK, well, that will be 10 quid to buy it. You've got to pay them that 10 quid.
Yeah.
So he's got to borrow that £10 to give it to them.
They don't say it's going to be 10 quid. It's like when you're doing eminent domain, you don't. It goes.
You
on,
want my house? You're going to pay market value for my house. I'm not going to let you have it cheaply.
You're paying market value, but if you're paying market value, it's still about. It's going to increase in value, and also you're saving. You personally are saving money because you're not paying for some landlord to buffer their mortgage.
Petrie, we're going to have this economy for dummies in the break. We'll continue, but we've eaten up all the time. We haven't done any papers.
I don't understand
but
it.
More coming up. Do stay with us after the break. We'll give you some newspapers.